The European Union is our biggest trading partner with $700 billion in business each year. Lots of major U.S. companies have exposure over there. So what does that mean to their businesses and our jobs right here? Here with analysis, retail analyst Heath Herzog, Wall Street Journal reporter Holiday, along with money managers Scott Martin and Jonas Max Ferris. So Heath, are you worried?
I am extremely worried about this whole thing. I think what is happening right now is dismal, to say the least. And I think what's really happening, you got to think about the corporate profits and the affiliate corporate profits that's happening in the investment in the UK and in Europe. So let's break it down. That's about 9% of affiliate global corporate profits that are coming out of the US into the UK. That's $153 billion. So that's the type of money that they're going to be losing. And I know the argument is that, oh, we're going to get even more profits is going to be coming into the UK because they're not going to be paying that tax going into the EU. But that's not going to cut it, especially for us here in the United States.
Scott, let's make it simple. When companies lose money, they very often fire workers. Is that going to happen?
David, I think it's coming. And let's take that whole issue with revenues further. When you go overseas and sell a good, if you're a U.S. company, you sell it in that local currency, whether it's, say, the pound sterling in the UK, whether it's the euro in the Eurozone. And what happens is when that economy weakens, when, as you mentioned, their central bank stimulates, the value of that currency, that local currency in Europe goes down. Therefore, when you sell a good in Europe and you're a U.S. company, you bring back that revenue and you have to convert it to dollars. That hurts your earnings because you're not bringing back as much as you once were when that local currency in Europe was worth more money.
By the way, I hate that term stimulates, because they haven't stimulated. The growth rates around the world are terrible, despite all the money printing that these central banks have been doing. So it's not really a stimulus. They think it's doing good, but it's not doing good. Jonas, could this affect U.S. jobs, though? As we were talking with Heath and so forth, it really, when companies have less money, they want to cut jobs in order to save money. Might that happen here?
Yeah, it won't be because of the currency effect in all likelihood. I mean, that is an effect that hurts shareholders. Your are lower, but you don't automatically should fine everybody because Starbucks is selling coffee in pounds now. They're not earning as much money. However, the other knock-on effects are worse. Like for the tourism industry right in New York City, for example, gets a lot of tourists from a country that now is at a currency that is at the levels it was against the dollar when Miami Vice was on the air. So that is going to lead to layoffs in tourism. There's also that London particularly will be hard hit because that was supposed to be the new financial center. That was before the 08 crash and everything, but that's never going to happen now. That's not going to be
Hold on a second. That's an important point. Don't just roll over that. Shelby, is it possible that London, which had been the financial capital or had become the financial capital of Europe, could lose that status as a result of this?
It's absolutely possible, and we already see banks threatening to move jobs to Berlin, to France, get them out of the UK because there's a big question mark right now surrounding trade and currency. Those are the two things that companies and countries are really looking at in terms of the negotiation.
But hold on a second. Let me again. Maybe I'm focusing too much on London, but I want to make it simple. And maybe this is too simplistic, but they speak English in London. Okay, that's where English came from. We speak English here. We care about doing banking, sort of. We care about doing banking in a place where they speak our language. Is that important at all?
It's important. I mean, Britain didn't vote itself off of the planet. It's just voting itself out of the EU. But because the European Union and the common currency they use and the trade agreements that they have right now are changing, that could change London's position as a global financial center.
Just to say, the question is how our economy could take shocks. Because right now, some people say, oh, we're okay. The president is talking about how the doom and gloom folks are overdoing it. Maybe so, but on the other hand, look at this. The economic growth has not been doing so well.
I mean, bottom line is that here in this country, we felt like we were just coming out of the clear here with this horrible recession that we've been in. All of a sudden, this ripple effect is going to have a major impact on us.
Could it drive us into a recession?
Yes. U.S. corporate investment into the UK and into EU was $588 billion. So when you don't have that investment going in because it's just the currencies make it too expensive, what's going to happen? Jobs are going to go away. People aren't going to, there's expansion's not going to happen. Those jobs that people were anticipating having, not going to happen.
Well, Scott, let us not forget the last month's job figures, which were terrible. We were expecting well north of 100,000, I think maybe closer to 200,000. We got something like 33,000 new jobs. Could it get even worse? Could we have a negative growth? Could we go into a recession?
Yeah, the big picture data, David, has already turned over. And I think one other thing, too, is you look at company earnings reports these days, there's limited visibility as it is before Brexit. Nowadays, if you're a company like Ford or Xerox or eBay that's going overseas and doing all this business in Europe and the UK, you've just lost a tremendous amount of visibility, just like we lost Miami Vice a couple decades ago off
Please,
TV.
with the Miami Vice, forget
UK
about
will
it.
not have
Shelby's too young for Miami Vice, but do you think
Yeah, I don't know what you
we're
guys are
in
talking
danger of
about.
going into a recession, Shelby?
What's actually the biggest threat of recession is not just Britain leaving the EU, but the subsequent, the momentum of this Euroscepticism and whether or not France will want to leave the EU, whether or not Italy will want to leave the EU. If all of these European countries decide they want out of the European Union, that could be tremendously troubling for the financial world.
That's the end of it.
Oh, Jonas is dying to get in. Okay, 5 seconds, Jonas,
Look,
quick.
the EU is like the Hotel California. You can check in anytime you want, but you can never leave. We don't really know what's going to happen when we
Miami
try to
Vice.
get out of
Don't
it.
tempt
Hotel
those countries,
California.
Jonas.
He's
They'll
going
get
back to
out.
the 80s,
See the
folks.
table anymore.
All
That's
right,
the
the
bottom line.
golden oldies right here. After his victory.